Hello everyone and welcome back to my channel. In today's video, I'm going to break down a recent trade that I took on the DAX. So let's do a quick recap and delve into the logic behind it. And I have recently added a playlist to my channel featuring my main trading strategy along with live trades where I applied this strategy. I believe this will provide you with a better understanding of the strategy dynamics and how to adapt it to various market conditions. Feel free to explore that playlist later. However, for now, I encourage you to stay tuned until the end of this video and don't forget to hit that like button and subscribe to the channel so you won't miss any upcoming videos. Now let's get started. So first thing, transparency. I shared that trade on my Twitter account. So as you can see here, there's the executions. I'm sorry, this is the setup on the DAX. And here is the executions entered here and exited here. And now let's dive into the analysis. For this demonstration, I'm going to use FX Replay, the best backtesting software on the market right now. If you want to try it out, you can use the coupon code STRANGER. They will give you 15% discount and 5 days trial. So you can try it for free. And let's get started. So we always start with the higher time frames, guys. Always with the daily or the weekly. We want to know what the higher time frame is doing. If you don't know what the higher time frame is doing, and then you go to the lower time frames and you take your entries, then you are gambling, my friend. And you will never find consistency. The higher time frame and the lower time frame must point to the same direction. So starting with the weekly, and I told you in my previous video that I'm expecting a deeper retracement to this fair value gap right here. So the price moves from external range liquidity to internal range liquidity, from swing highs to fair value gaps, and from fair value gaps to where? Swing highs or maybe swing lows. So as you can see here, price took external liquidity, next retraced to internal liquidity, fair value gap, and then external range liquidity, retraced to fair value gap right here, internal. So from internal then to external, right? And then we took this equal highs right here, and we are waiting for that weekly internal liquidity to get filled. We have some kind of a retracement to it here, but I'm expecting a deeper retracement. So now the bias of the weekly is bearish. Now let's go to the daily time frame and let's see if we have bearishness on the daily time frame. So you go time frame by time frame and you wait for them to turn bearish, right? So all the time frames must point to the same direction. This is called time frame alignment. So what do we have on here? We have returned to this order block, right? On the daily time frame, break of structure, return to order block, premium order block above 50%, and now we are waiting for a move to the downside, right? So now the weekly is bearish, daily is also bearish. Now let's go to the 4 hour and see what's going on. And when I open my chart, I saw this. So first of all, we can see that we have created a low resistance liquidity right here. All right, this filled swings, we have a break of structure, we have fair value gap right here. So I can expect price to move from this fair value gap right here, internal range liquidity, then external range liquidity. We have also this breaker block, right? Premium breaker block, and now let's refine that breaker block right here. So we can expect a move to this fair value gap right here, maybe touch this breaker block and then reach it. We don't know which one to reach. For example, it can easily reach to this area right here, consequent encroachment on this fair value gap and then continue lower. We don't know that, but the lower time frames, the time frames that below the 4 hour, will tell us if price wants to go all the way to here and then continue lower, or it just from this area right here 50% and then move to the downside. We don't know that. You wait for the 15-minute time frame to confirm. So let's go to the 15-minute time frame and then we wait. So as you can see here, price now is retracing to that area right here, point of interest. And as you can see, it is creating what? Low resistance liquidity. So this is low resistance liquidity. Price is moving like this, right? So you want to see this when you want to take a short position. You want to target all this low resistance liquidity. If we have something like this, for example, this, then this and price start retracing to this area right here. Now this is called high resistance liquidity because price already took liquidity from here, right? This swing right here took liquidity from here. Then it will face resistance to reach to here because there isn't much liquidity, and price always seek for liquidity, guys. So we have low resistance liquidity and that is good. Let's keep forwarding. And now, so we have the weekly is bearish, the daily is bearish, the 4 hour is also bearish. We have that break of mentorship, and now we wait for the 15-minute to be bearish, turn bearish. As you can see, it is still bullish, so we don't do anything. And now what do we have? As you can see, we have a break of structure, market structure shift. We have a breaker block right here, and we are, remember that we are on that 4 hour breaker block. So now the 15-minute is also bearish, and frankly, I don't like to wait for another time frame to be bearish. I believe this is enough, so I don't go to the 1 minute or something. I entered from here, my entry from here. My stop loss was just above here, above the bodies. And your TP, for example, this Fibonacci up right here. If you want to hold, then that is your choice. But I like to get in and get out quickly. So I took my entry from here. Now, as you can see here, would you trail your stop loss here above here when you see this break of structure? Absolutely not. Always expect the market to do continuation purge. What do we mean by continuation purge? For example, something like this. So we have a market structure shift. We have come back to this fair value gap, for example, and then the price is now going lower. Always expect this move right here. Always expected this move right here to take the liquidity from here and stop traders who are participating in this short position. So you don't move your stop loss until you see a continuation purge. And as you can see, we have a continuation purge right here. Now you are safe to put your stop loss here, trail your stop loss. Why? Because this swing right here already took liquidity from here. Then the market has absolutely no reason to come back all the way here and take liquidity. If the market return to this area right here, then there is high probability that it is just going to keep going up. So your stop loss is safe here. And let's move on. And as you can see, straight to my TP. I told you before, guys, that when you have this kind of environment, low resistance liquidity, then expect a sudden move to the downside, explosive move to the downside. It always happens. As you can see here, let me show you. So this is the trade of Wednesday, I believe. And as you can see, we have low resistance liquidity right here. And explosive move to the downside. So this is why I always tell you to target low resistance liquidity. And I believe we have come to the end of this video. If you have any questions, please DM me my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.